Stocks mixed. We will take that after Monday's relief rally. That came when President Trump softened his tone, saying China had a bad moment and promising it will be all fine. The next market mover may be Jerome Powell, who's set to speak publicly today for the first time since September's quarter-point interest rate cut. We will have all the breaking news from that as soon as the Fed chief takes the podium in Philadelphia. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-host, Kevin O'Leary, Brian Berenberg, Jackie DeAngelis, and Making Money host, Charles Payne. We've only got him for an hour, but we will make the best of it. The most of Mr. Payne. JP Morgan, Citi, Goldman Sachs, and Wells Fargo kicking off earnings season this Tuesday. Investors are flying blind this week when it comes to key, say, economic reports like consumer prices, retail sales, all of that on hold during the government shutdown. And now, this is not new, but still in the forefront of people's minds, bubble fears about artificial intelligence are back with the biggest names in technology pouring billions of dollars into each other, fueling talks about a self-made boom that could turn bust. That's not a period, that's a question mark. What are you watching, Charles? What are your biggest concerns here, if any?
I don't have a lot of concerns, really. I'm really completely excited about the time we're living in, the opportunities that we have. And I think the biggest problem I have is with people looking at this as the market. You know, I did a back of the envelope last night, and I figured I've been to the supermarket 107 times in my life. Okay? I've never gone in the supermarket and bought every single thing in there. In fact, I've never even gone to the apple bin and just picked up any apples. I have always looked for the ones that I thought were the best. This market, if you're selective, can change your life. It already is changing lives. It already is changing lives. So the stuff that's happening, and what's ironic about it, this is an America First rally, right? The rare earth stuff, the quantum stuff, the artificial intelligence stuff, industrials that are working because of reshoring and onshoring. This is absolutely amazing. And I think because of the saber rattling and what we saw going from Thursday to now, more people are coming on board with the notion that, hey, we should be investing, you know, in these rare earth companies. We should be. This is the same as the highway program. This is the same as turning plowshares into tanks. This is that kind of moment right now, and it should be all hands on deck, and the market's reflecting that.
Can I ask you a question about, I love the way you talked. I can't believe you've been to the market only 107 times in your life, though.
The supermarket.
You've been to the supermarket more than 107 times.
I've been to bodegas, but I'm just saying like a big supermarket, you know what I mean? Like where there's a whole bunch of stuff.
So here's my question for you. You're looking through the apples. Every apple in the bin right now says we've got a major AI play with us, okay? And a lot of them don't have revenue yet, right? So how are you looking beneath the hood to find those apples, you know, that don't have the worms underneath, that don't have the spots? What do you do to do that?
Well, the great thing is there's so much information out there, right? I mean, that's the most beautiful thing out there. There's company reports, there's industry reports, almost every single way. There's industry periodicals. There's so many ways if you just want to take the time, maybe skip a round of golf. You know, maybe instead of investing like, you know, into a fantasy football league, invest into doing this sort of a research. You know, a big name that's up, right? Nevada's, right? MVTS. Stock popped in May. They had some news making a power system for NVIDIA. It popped again in June, popped again in July. And all the articles like, is it too late? Is it too high? It's ahead of itself. Well, it's up again today, right? And so I think there's so much focus on, did I miss it? What was it? It's going down, you know, tick, 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 tick. You know, when we watched Tom Brady win his 4th Super Bowl, I don't know if any sports network said, man, one day his arm is going to get tired. One day he's going to retire. One day he's going to be slow. No, it was on the majesty of the moment. Yes. The good thing about this, though, the majesty of this moment.
You got Jackie on Tom Brady.
The majesty of this moment is that the people watching the show can participate. This is their Super Bowl if they go out there and go get it.
I agree. I think if you're sitting out of this market because you're scared about what could happen, we could what if all day, right? And it could be 2-3 years, more than that, before, if there is a bubble, the bubble bursts. What we have learned over time is that if there is a problem in the market at some point and there is a little bubblicious activity there and there's a sell-off, you want to stay in it. That was one of the biggest mistakes I made in 2008, being so scared on the way down, liquidating. Wrong thing to do. You hold it, and you wait for it to come back, because it does come back, and then it comes back and with some more.
Yeah, and then, by the way, when it was down there, it created some fresh opportunities.
Well, the down hadn't started yet, and that's my concern. And Kevin, you can jump in here, you too, Brian, because I'm not taking over
Well,
the
the
floor.
lot of worry on AI, the so-called self-dealing between the behemoths, buying and selling stuff to each other, is being sort of, the analogy is the early 90s on the internet bubble with the pets.com and all that stuff. But the big difference is, I can't find a sector of the economy that isn't using AI now. Every single sector, all 11 sectors, including all the small companies I invest in, over 54 of them, every single one of them is using an AI app and is spending more on AI applications than they did 18 months ago, because it's a productivity tool, a margin enhancer. So this idea that it's a bubble in the sense that all these companies don't have earnings yet, it's a race to see who's going to deliver the prize. And I bet on all of them. And, you know, I'm talking my book a little bit because I developed data centers as a real estate guy.
Right.
I have never seen demand like this in CapEx for real estate that's applicable for data centers. We've got demand for 45 gigs in North America, and only 5 are under construction. Every guy and his dog is trying to find 5,000 acres they can put a data center on. And so, yes, it sounds bubblicious, but it's actually a useful tool. So I'm in the camp that says, stay the course, get diversification. And I also think people should start looking at blockchain, because Wall Street's looking at it now, to combine blockchain with AI for very interesting applications. And I saw a prototype of that in Singapore last week. You pick up your phone, you're beside a bodega or a coffee store or a well-known burger chain, you say, Big Mac with cheese and a shake. Walk in and pick it up. That's it. No app, nothing. Nothing. It completely translates, and it geolocks where you are. It knows what you want because you just told it, and you walk in the store and you just pick it up.
And the blockchain's the payment?
The blockchain does the payment system. It's surreal. It was incredible, and it's actually prototyping. So I think it's 24 months away.
If my kids got their hands on that phone and it was mine, I would be so broke. Can you imagine how much unapproved shopping would happen? I asked you about the kind of picking the apples, Charles, because like in any kind of wave like this, inevitably you're going to pick one and you're going to realize it wasn't the one. That's just obvious. But I'm kind of agreeing with you in that I don't think that should scare you about being in on this. We just had the Nobel Prize, not only the Nobel Peace Prize this week, but in economics.
Right.
And the 3 guys who won it basically did work that extended Joseph Schumpeter's theory of creative destruction, which is one of the most beautiful things in the capitalist system, because you take an existing order and you find a better way to do the thing, or a new way to do a new thing, and it subverts the old, but it improves people's lives. And so on AI, I'm of the view that we're in a bubble. We've got some kind of bubble. We've got bubbles everywhere, okay, because we don't know the future. And you're going to put your money in the wrong thing. But that's okay. What the most dangerous thing for a society is to start saying we can never have a bubble. We can never have bad bets. We can never have wrong bets. If somebody gets it wrong, I'm stealing this from you, they're going to get bailed out, Dagan. Because if you do that, you cease to have capitalism. The markets are about success and failure and what you learn from both. And I'm nervous with the bubble talk right now, not that we have or don't have a bubble, but that when the thing starts to get pricked and burst, you're going to have the rush of people coming in and saying, save them, bail that out, have the government take a stake, and that is going to kill capitalism.
Speaking of bubbles and bailouts, we will be covering Argentina in the next hour and the U.S. government bailout of Javier Milei. That's small ball. That's small time. My concern is, and anybody jump in here, it's not artificial intelligence and any kind of overinvestment. Let's call it an overinvestment in AI data centers. That's equity. We get into trouble as an economy, as a nation, even as a world, when it is a credit bubble. And when it is a credit mania and that collapses in on itself, because we're an economy that functions on credit. And if credit tightens up, dries up, our economy can't function. And that's when you get the bailouts from the central bank and the federal government. And what has happened just in the last several months is, and I've mentioned this is in private lending. No one knows really the problems that are out there in private non-bank lending. All this new hot money went into these lending funds that own this debt. And these funds are leveraged. They're like 2x leverage in some cases that made private loans, not small business loans, and they were supposed to be, they adjust, the rates on them adjust, and you get paid back. Their recovery rates are like 80 or 90% if a business goes bust. And so far with these blow-ups that were sudden and smelled of fraud, Tricolor and First Brands, and there were more problems that's not the case. And I'm just saying that if there are more of these, and it's more than just a couple of kind of ill-timed fraud-ish bankruptcies, this will be a cascading problem.
Yeah.
And the government doesn't know how to fix it and really doesn't have any way of fixing it. And it's not just these two blow-ups. There were other problems emerging in credit markets. Saks Fifth Avenue was one, and also New Fortress Energy crashed as well.
I agree with you on that. I just want to pivot for 1 second and say all of this is also happening in the backdrop of this trade war with China, upcoming deadlines, and
Right.
President Xi and President Trump going back and forth. Jameson Greer, trade rep, making some comments last hour talking about where we stand with those 100% tariffs, saying that it depends on Beijing's next move, which is why the markets got a little bit of a boost today. But Brian, yesterday we were talking about everybody putting their cards on the table and trying to be as tough as possible. AI is a big piece of that. Don't think that Xi Jinping isn't sitting back and seeing what we're doing here in the United States and this president's push on AI and building out the data centers and letting capitalism flourish the way you were describing to get the edge and get the advantage there. And that's another reason that I think that Xi is trying to act so bold. He's really worried about that.
The capitalist engine can roar big time if you let it. I think he wants to make sure that he can suffocate it somehow. But I think President Trump cares enough about this that he's not going to let that stand in the way.
Yeah.
Even if it means on our own side, rare earths in America and doubling down and investing.
Well, we got a double, quadruple. Yesterday I did the whole walkthrough on how we gave that away.
Yeah.
We were the dominant force, and Mountain Pass, California dominated the entire industry around the whole world. But the water went into the Ivanpah, dry lake. And there was some radioactivity and a few leaks, and they said, let's get rid of that. By the way, they replaced it with the Ivanpah solar panel thing that went bust last month. $2.2 billion, $1.6 billion taxpayer money instead of, finding a way to maximize it.
But you still can't get a permit. I mean, I know we're trying to...
I know, but I think those things are going to be... Listen, I think if you listen, for instance, to Scott Bessent yesterday saying, comparing this to the COVID thing, warp speed, bringing up those things. This is, I think we have to look at this, to your point, from permitting to everything else as on a war footing. Yeah. On a war footing.
The policy's there, but it hasn't gone down to the state permitting level. I'm an investor. I would invest in 2 seconds if I could in that. It's just a myriad of permitting that's going to take years. Unless the executive says enough, slices through the BS at the state level, you can't build squat in terms of drilling into the ground and pulling rare earth out. You just can't. Look, I'm just a realist. That ain't going to happen anytime soon until... Imagine going to Gavin Newsom and asking for a mine that has tailings that's going to take out radioactive elements out of the earth. The chance of that happening, 0. So until that gets fixed, we're still screwed.
Well, there's some ways the federal government may have to leverage.
Well, I hope they do.
Power, the eminent domain, whatever they have to do, because this is a war. This is a war.
China's kicking our butts.
Right. Well, we gave it to them. We gave it up because of the Gavin Newsoms of the world, and now it's time to take it back and get back in the fight. There's no other way. This also means we got to go after Greenland even harder. Maybe not take them over, but we need some deals there because they've got a lot of this stuff. Ukraine has a lot of this stuff.
Canada has it.
Canada has it.
Latin America, which we're going to talk about in a second, has it.
Yeah.
And also coming up will be my thoughts on J.P. Morgan. J.P. Morgan had a whoopsie with a Tricolor, the subprime auto lender, had a $170 million charge-off, a mea culpa from Jamie Dimon, but he actually used a phrase I used the other day. When you see one cockroach, there's probably more. Their stock is down today, and I think they had their worst quarter. Banks said its credit losses were $3.4 billion. That's the highest since the first half of 2020. Well done, Jamie.